Morgan Stanley just called Ripple a leading SWIFT alternative. Weeks later, Ripple filed for a U.S. National Trust Bank charter. If regulators greenlight it, banks can plug into XRP liquidity directly. That's not theory. That's a new backbone for global settlement. A Wall Street giant validates the rail. The rail's builder asks the OCC for federal armor. If that charter lands, banks won't tiptoe around crypto. They'll plug into XRP liquidity with compliance-grade clarity. Liquidity meets licensure. Settlement meets seconds. What happens when the fastest ledger in the room gets legal teeth? What corridors flip first? Who bleeds basis points while they wait for a memo that's already on the CFO's desk? This isn't about a coin. It's about control. And when control shifts, so does power. Who takes the reins when the old rails start to crack? I've seen this cycle too many times. Liquidity brings attention, but utility decides survival. Bitcoin pulls in the money. Just one day in October, US spot ETFs absorbed $1.19 billion, with BlackRock's IBIT taking almost the entire share. That's institutional gravity in motion. But liquidity without direction is dead weight. Banks don't hold assets to look smart. They move capital through rails that settle fast, cheap, and with certainty. That's where Ripple's XRP ledger comes in. Each transaction clears in 3 to 5 seconds, with fees near 0.00001 XRP, turning speculation into usable infrastructure. Compare that to SWIFT GPI. 75% of transfers reach the receiving bank in 10 minutes, but only 43% credit the final account within an hour. That delay is fiction, and friction costs money. So when billions flood into Bitcoin, the next question isn't which coin pumps, but which network moves that capital efficiently. Liquidity opens the door. Utility keeps the money alive. And XRP was built for exactly that. If liquidity just grabbed the wheel and utility has a pulse and a target, what's your move before Wall Street drives off with the upside? Morgan Stanley just did what few banks dare. It named Ripple's distributed ledger as one of the leading international payment alternatives to SWIFT. Their report wasn't speculation. It was an efficiency audit. The language was cold and clinical. Shorten settlement periods, reduce fraud, free trapped capital. In numbers, they estimate XRP Ledger could cut processing costs by up to 60% and unlock idle funds from nostro vostre accounts. Capital that's been frozen for decades in the old system. That's not crypto talk, that's balance sheet math. Banks face a binary. Evolve your rails or sacrifice margin every settlement cycle. Fear says, don't be the last dinosaur. Greed says, be the first predator. The ones who move early win corridors. The ones who wait make excuses in the risk committee. And that's where the story widens. When Wall Street begins measuring blockchain as payment infrastructure, Washington starts paying attention. Because once institutions see utility, governments start to see strategy. Washington has shifted its tone. Vice President J.D. Vance stood at the Bitcoin 2025 conference and called Bitcoin a strategically important asset for the United States over the next decade. His argument was clear. When China bans Bitcoin, America should embrace it. When adversaries restrict financial freedom, the U.S. should build it into infrastructure. In March 2025, President Trump signed an executive order establishing the Strategic Bitcoin Reserve, not as speculation, but as national policy. Once a government treats digital assets as strategic reserves, it must standardize how those assets move. Ownership demands infrastructure. Infrastructure demands standards. Ripple is building exactly that. Bank-grade custody, instant settlement, audited controls. Geopolitics is a knife fight over tempo. The nation that moves value fastest controls crises, sanctions, aid, and trade. Fear whispers, do not let rivals set the rhythm. Greed answers, seize the rails, capture the rents. Ripple isn't waiting for permission. It's filing for a national trust bank charter, while XRP settlement channels are already live. The strategic Bitcoin reserve exists. Morgan Stanley is evaluating the stack. The infrastructure debate has moved from if to who builds it first. And whoever runs that first regulated corridor between institutions doesn't just move money. They set the standard every other player must follow. While the Rails debate plays out, another infrastructure story is moving behind the scenes. Unich, an OTC trading and on-chain liquidity platform, highlights. Unich claims substantial OTC volume and a fast, smart OTC stack that services pre-market and P2P OTC flows. If you trade or build on OTC liquidity, Unich might be worth a look. But this is not financial advice. Check the link in the description for Unich's official pages. Ripple just crossed the banking line. The filing, 2025 Charter 342347, sits inside the OCC's database, not a press release, not vapor. A national trust bank, fully owned by Ripple, aiming for federal custody rights over digital assets and the reserve backbone for RLUSD. If it passes, it gets one step closer to Fed account access, the Holy Grail. But that door doesn't swing open easily. Custodia proved that. This move drags stablecoins into federal jurisdiction, wiring crypto liquidity directly into the system that controls the dollar itself. The old guard is pushing back. NCRC and ICBA want to slow it down, screaming risk, compliance, consumer safety. That's code for fear of losing control. They know once a crypto bank gets the green light, the walls around traditional finance start to crack. But Ripple's playing the long game. A national trust charter means legitimacy, infrastructure, and a seat at the Fed's table, the kind of leverage that turns competitors into clients. This isn't hype. It's proof of intent. Ripple positioning itself inches from the core of US money flow. Who builds the first compliant bridge between stablecoins and the Fed's rails? And who gets trampled when that bridge becomes the new standard? Payment speed isn't a feature, it's a weapon. XRPL's payment channels turn it into artillery. They move value off ledger through signed claims, then settle on ledger once, cutting latency, cutting cost, cutting noise. Every channel is pre-funded, tracked, and cryptographically sealed through payment channel create, fund, and claim. One signature, thousands of micro movements. Finality in 3 to 5 seconds. Fees that barely register. Systems that force every microtransaction on-chain bleed out under their own friction. XRPL doesn't. It moves like a neural network, instant, continuous, precise. That speed isn't just convenience, it's control. It's the rail for streaming payments, IoT commerce, machine-to-machine trading, real-time economies where every second costs or earns. The war now isn't over if it works. It's over who orchestrates the first regulated streaming payments corridor on XRPL, who captures the velocity before the herd wakes up. The primitives are ready, the playbook is public. Execution decides who scales the flow and who drowns in it. If Ripple captures those first corridors, remittances, treasury flows, FX swaps, how long before the network stops competing with SWIFT and starts replacing it? Quick update on Unich. Their IDO for the UN token is live. The project markets a low FDV approach, referral rewards, and NFT perks for early participants. They present themselves as an on-chain OTC liquidity layer, aiming to capture pre-market and institutional flows. Again, not financial advice. Check the link in the description for Unich's token page and white paper before deciding. Big infrastructure shifts are messy, slow, and politically charged, but they are the only kinds of changes that actually reshape how money moves. We've seen the signals: institutional evaluation, policy interest, technical readiness, and a formal charter application. That doesn't guarantee a rocket ship price or an overnight switchover, but it does mean the debate has moved from if to how and when. Subscribe to WealthyWise, Drop your opinion below. Are we watching the rewiring of global money, or just another corridor test? I'll see you in the comments.